Monday, and welcome to the Target Zone. Today, I want to cover my own personal trading plan with you guys today. But first of all, I want to share this quote by Muhammad Ali. He said, "Even the greatest was a beginner. Don't be afraid to take the first step," by Muhammad Ali. Now, let's jump right into this trading plan. First of all, first part of your trading plan, you got to figure out what your purpose is. What is your purpose of trading? Learning to trade for more important than trading itself, which it simply means is why. Now, this is the following of my reasons why I trade. I will keep the reasons in the forefront of my heart and mind each day that I trade. That is my purpose for trading. Now, the next part is your strength. You would really need to know your character traits to be a trading minded person, which is my strengths are discipline, patience. I am a coachable person, decisiveness, flexibility, committed, organized, goal oriented, planner, emotionally stable, ability to focus, and the ability to overcome setbacks, of which that's the ability to overcome losing trades. You can't take losing trades. You can't take that to bed with you. You cannot do it. And also, you got to be a self-starter and a quick learner. Now, one thing I did learn when I was in the military, I was in the army as well. I had a career in the army, and it taught me to be disciplined and organized and goal oriented. It's about the team. Now, in areas that I wanted to improve in was being impulsive. Those are character flaws, and to be a procrastinator. And also, in addition, study market charts and trends, set stops, entry, and target orders. SET, set. And also take the day off when you're mentally tired. I covered this once before about being tired. If you're tired, take the day off. Take the week off. Take a vacation. My last vacation, I went to Cancun, had a ball, came back refreshed. Now, your goals. That's another thing that needs to be covered is your goals. That my objective is to establish realistic goals with regards of my training and investing opportunities. This will help me to stay focused on managing my risk, rewards, my income goals, in which my income goals is, in which your income goals is gonna change. It's gonna change, and it's gonna change as you make more money. But at this time, it was saying a 15% increase per month on trading stocks and ETFs, and 15% increase per month trading futures, which I trade futures also. My wealth goal, which now this has changed. My goals, and that's what I wanted to accomplish out of investing. At this time, it was 15,000 the increase per year, but with inflation and everything, and also this was I am retired. I am a year and a half out retired from the federal government also. So at that time, this only was a supplement my income. So now I'm retired now. So now it's gonna change, and it need to be updated. Okay, markets that I trade, in which I truly believe that you must have a diversified portfolio in all the trading activities. So therefore, like I say, I trade in the futures, ETFs. At one time, I was doing Coinbase into Coinbase also. Now, the next section will be trading in investing accounts. You got to keep track of your capital. You got to keep up track of your capital, your money. You got to keep track of it, which I have a Merrill Lynch account. I do account with Robinhood. I have a Wells Fargo initiative investment account. I have a Amex precious metal account, which I do invest in gold and silver. Coinbase, I have that, and then also, even though I have a bachelor's degree in business administration, but I also invested $18,995 into going to a trading academy to. So therefore, I invested into my own education as well doing that. But as a matter of fact, the $18,995, I made that trading in the stock market anyway off of Moderna, and by now I have made that money back already. I have made that money back. Okay, your multiple time frame analysis, which is hourly, daily, weekly, and monthly income. Your curve is weekly, trends is daily. Then you got your zone, which is 5 minutes. Then you got your refining, which is 10-minute zones. Okay, your trading execution, rules for entry. Income trading, always set your stop order. Always set it, your stop order. Next will be your trading execution, rules for stop loss. If you're going to execute, place a stop loss, your stop order. The stop loss should be placed beyond the decimal line using a buffer margin of 2% of your daily average true range for income trading and a 10% of your daily average true range for wealth trading, which wealth trading is a person that trade and they buy stocks, big stocks like Tesla, Nucor, uh, out of the Fortune 500 companies that most of the time they are productive. And what they do, they hold them and stick with them and they never sell them. They just hold them over and over for years and years. And most likely they end up, their kids and grandkids end up with them. That's what you call building wealth. Then you got you also going into your trading execution, your rules for target and profit exits. Knowing when to exit a trade directly related to whether the trade will be profitable or not. The following are my rules to help me achieve my profitable exit. For income trades, the target is placed 2% above the first opposing lower time frame. The training execution, this is a flow chart, excuse me, of how things should go. This is before the trade, the annual, quarterly, and monthly trades that you're going through. Your watch list, you set your risks, rewards, rules, define your purposes. Then you go through your before things that you do before your trade. You set up your trade, your pre-steps, you set your curve, you check your trends, whether it's an uptrend, a downtrend. You identify your zones, whether it's a supply zone or a demand zone. Also, when you check your trends, uh, supply zone, whether that stock is in an uptrend, downtrend, or is that stock moving sideways? And you identify your zones, score your trade. And here we go again. Set, S-E-T. Always remember that set. Stop entry in your target. Then you place your order. After you place your order, you got to manage your trade and you got to monitor your reports after the trade. At least that was during the trade. You have to manage and monitor, excuse me. Then after the trade, you got to log your trades. You have to log your trades and keep accountability of your trades at every day. Also, now we look into the different zones. You got a supply zone, you got a demand zone, right? Then you got your trends. You got downtrends, sideways, uptrends. Those are your trends. You're going to go curve, you're going to go short. Okay, now, trading execution, placing the order. Placing the order of a trade must be checked and double checked. There's a set process that you have to go through when placing your trades. Always set your stop loss, entry limit, and your target limit. Which your entry limit is where you want to get in, your target limit is where you want to get out. And if you set an entry limit and you do happen to get in that entry limit, you might get in at say $110, but that entry limit start to fall and fall and fall. That's why you put your stop loss in place so that it will stop you from losing. It'll get you out the trade. And that's part of your risk management. You're part of your risk management right here. You have to manage your risk. You have to do this. Always use your stop order. Never open a position in the market without knowing my initial risk. And what that's saying is, don't go and open a stock just because somebody told you to go and open it. Go and do your research. Go and do your charting. If you don't know how to chart, you need to learn how to read a chart. And like I say, I went to a trading academy to learn how to read charts and about investing, and it was very helpful. Also, you got to define your profit and loss and multiply my risk. Limit for me, you can limit your loss by doing a 1-to-1 or less, a 1-to-1 ratio, and only take opportunities with a reward versus ratio, which some of you may have heard of your 3-to-1 risk ratios. You're willing to risk this much to get this. And you never risk, where I never risk 2% of my trading account for any single trade. With multiple trades, I never risk more than 10% of my accounts. Say you might have 10 trades, but you never want to risk more than that 10% of the money that you got into your account. Okay, and you got additional rules. Use appropriate enter orders to enter my position. That way, I remove my emotions out of the trade. I only use brokers that hold my orders in their servers. So, in a situation of a power outage or an internet drop, I will remain protected. Stop order in place at all times. Backup trading platform every day, and back up my trading computer on the cloud every day. Log my trades in. Keep track of your trades and keep track of what they're doing. You go back into trading execution. Once my trades have met the entry, begin to move in my favor, I will move my stop loss. Saying that if it start to move in your favor, you might want to move that stop loss up a little bit more, so you can save some of your profit. Okay, well, lock in the profit. The rules for managing trades follow as: move your stop to break even once the trade has reached a 3-to-1 in your favor. Move stop to lock in profits. Every time a new supply zone or demand zone is formed in the zone after trade has been met entry. And all of this saying is, keep check on your stop loss. You can move your stop loss up or down depending on which way that stock is going. Okay, and this right here is just one of the charts, how you keep logs of what you're doing, how much you're risking. That's in the futures, in the stocks. You can do Forex. It got options. I have recently started doing options trading, and it's been pretty effective. Then you got your trading execution checking reports. This is something very important too. Even on your YouTube channel, you have a lot of very intelligent, knowledgeable people that's trading on there. But like I said, you can't listen to everybody. Pick you one and try to pick up on what they're talking about. It might make you some money. But also, it's checking reports every day. You should. My TV, go to Yahoo Finance Daily, Econoday. investing.how.com, daily reports and earnings reports. That's another thing you need to keep up with, earnings reports on all of your stocks that you buy. You need to know when your earnings are for each quarter. So also sometimes during earnings, you can do earnings straddles. You will buy a stock right before, especially a stock that have a lot of profit in it. You will buy that stock a couple of weeks before earnings, and then once the earnings hit and that stock increase, if it increase, and then you sell it. That's how you do your straddles or earnings straddle. But also, you look here, you got florexfactory.com, daily reports, earnings reports. Then you have a bar chart, which this is not on this list. And like I mentioned once before, you got yahoofinance.com and you got seekingalpha.com. And here we go again. We're still talking about execution. Log in your trades. Every closed trade will be logged daily. If you close it, log it in into your tracking, your tracker, your trade tracker. Trades will be logged at the end of the day after each trade has closed. Then we're still on the executing your trades. Review your results. I will make sure not only keep the data results of each trade, but I will also take screenshots, notes. In addition, I comment on keeping notes on each trade of my feelings, expressions, and what I learned from the trade. You will have emotions about trading, but the thing is, don't take your emotions personal. Do not take your emotions personal in this. Leave your emotions at the door. Leave them checked. Okay, now you got your trading schedules. The following helped me plan out my daily life, or whether you trading, you got week, a month of the time as a trader investor. And you should treat your trade as a work day and committed to be constantly committed to it, executing my plan on a consistent basis. And for me, I try to devote at least 4 hours of my day into trading ETFs and stocks. And so this is my time schedule, 10:30 to 2:30. Now, I have learned that the best time to trade in the market is an hour after opening. So I come in, say at 10:30, get up, have my coffee, maybe go for a quick run or get on the treadmill. And the next best time for trading is after lunch, because you know the market closed for lunch. And if you notice, getting closer to lunch, the trading slows down. So then after lunch, 1, 1:30, 2:30, that trading started picking back up again. Then I only devote, excuse me, devote 4 hours per week to my future trading. And that's from 6 p.m. to 8 p.m. And with all of that being said, y'all have a blessed Monday. And that is the end of my trading plan. And I was glad to share it with you guys. And if you have any questions, ask me in the comments. I get back with you. Share it with your friends. Like it. Subscribe to my channel. I'm willing to learn you or teach you a lot. And thank you very much and have a good rest of your Monday evening.